Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave Technical Analysis. Today is October 20th, 2013, and today I will go over two futures, and that's gold and the S&P 500. Now let's just start out with the S&P 500, and we see that prices have been pushing high aggressively over this past week. So we were calling for that, and it was illustrated in our intraday charts that we were anticipating that prices would push higher in this pair as we had that wave 2 completed and we were looking for wave 3 to take off, which is what we saw. But as we take a look at the waves before that, we see that we had that larger wave 1 completed, and that was followed by a 50% retracement, which gave us wave 2, and then now we are currently in that third wave. Now, initially it appears as if we will get the extended wave within this bunch, and it should be in wave 3. So targets for that is set at 1850. So we should see that wave 3, that larger wave 3, this orange cycle, to terminate at about 1850. Now as we take a look at the subwaves for that wave 3, see that 1 and 2 is already completed, and wave 2 terminated at about 76.4%. So we should anticipate that our wave 4 would terminate at that 23.6% mark. Also, just based on how the waves are already setting up, it appears as if wave 3 will be that extended wave. So we should see wave 3 push towards 1800. So it should be towards 1800, might be a bit shy of that. And then we should see a slight correction towards 1760, and then we should see it jump about 100 points to round out that fifth wave, which would put us at 1850, our initial targets for that larger wave 3. Shifting gears over to the gold futures, still in the hourly charts, and with gold futures we have been calling for a reversal in this pair for some time now. We saw that prices were pushed down from about 2000, came as low as 1180, and we have been calling for that correction for some time now, and we took advantage of that wave 1 so far, and now we're gonna see if we can take advantage of this third wave. So now with this, we saw that prices have pushed higher and then started to correct. We initially thought the correction would have ended at the 61.8% fib, as we see prices did hit it and bounced off it a couple of times. Bounce off here, 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 and we were anticipating for it to bounce off at this level and then break that descending trend line. But prices did push through that level, and now it appears as if it's ready to take off from this point. So we did get a break of that descending trend line, and I'm expecting prices to push back down to give us a retest, or at least a drop to that 50% fib level. So that would be 1306. At least drop to there and then push off higher. But I'm anticipating a move towards 1300, and then it should push off from that point. So that would be a good area to look to get long this pair. But based on how both these futures are setting up, it appears as if the week will be dominated by risk, or we could just see this dragged out corrective move, which should go down to 1300, and then we could see the dollar rally from that during this week. But definitely looking that risk will be pushing higher in the weeks to come. So that's the video for today. Any questions or comments, definitely feel free to jump in the chat room, and Paul or myself will gladly assist you with any questions or comments you guys may have. For you guys out there that are trading, have a safe week trading, and good luck.